again, this is Ken Kraetzer for CBSI Services Talking Business, our interview series talking with leaders in the areas of digital marketing, direct marketing, banking, insurance, customer service, and business education, all to highlight our team at CBSI. We're based in Harrison, New York. We provide insurance-based benefits to the credit card and payments industry. And today we have a chance to talk with one of our friends. That is Eric Rosenberg. Eric is a personal finance writer, also covers travel, covers Fintech, covers a lot of areas, as a pilot, has done a lot of things, and working out of Ventura, California. Eric, good to see you. How you doing?
Hello, good to see you. Thanks for having me back.
Our pleasure. Well, you've been doing a lot of things, a lot of writing, podcasts, and such. First, one of the things we've been following, obviously, is travel and something close to your heart. Certainly consumer travel became very strong over the summer. A lot of pent-up demand. Business travel is still not there yet. Cruises are back in motion, but still concerns, especially with this Delta variant out there causing problems, especially in the South. What do you see on the recovery of the travel industry?
Yeah, so you hit all the big points. There has been some pent up demand, but we're not where we were before. I could even use myself as an anecdote. I fit exactly the story you were just telling. In May, we had our first family trip since COVID started. We went to Hawaii. Being in California, we could get there. We knew, at that point, COVID wasn't gone in Hawaii, but it was very, very low case level. They were very strong mask requirements, had very high vaccination rates. So we felt pretty good doing that trip. And then we did another trip a little later to Salt Lake City. We had an Alaska Airlines credit to use up and had a very different experience there. In Salt Lake City, in Utah and Hawaii, they had different opinions on masks and things like that. But after those couple of family trips, I got out and did a couple solo trips. I went to my first conference since COVID started. That was the Podcast Movement Conference in Nashville. And Nashville, another place that they don't have very strong virus restrictions. There's no mask rules. So in the conference areas itself, where we had people from around the country, I'd say we had probably 75% of people kept masks on. There were encouraging signs all over, but it wasn't strictly enforced. The couple times I got out of the hotel, though, I was probably the one or two people wearing a mask. It was an extreme minority. So yeah, definitely where you go in the country, you see very different things, and so no surprise we're seeing varied recoveries and virus responses. So yeah, so to your point, where's travel going to go? For families, I was thinking about Thanksgiving and maybe going out to visit my sister on the East Coast, but my kids can't get vaccinated yet. They're 1, 3, and 5. So while I can get vaccinated and I feel pretty safe traveling around, my kids don't have that benefit. So I think we're going to see family travel continue to lag, especially for the more cautious families who don't want to expose their kids. But my kids are they're going to school. They're in kindergarten and preschool, so it's not like they're in a bubble. So so there's definitely some risk. There's some back and forth. And for the business travel, I think it's going to be still a mixed bag ahead as we keep recovering. As I think more business people are probably getting vaccinated, just in the nature of the type of people who work in the types of jobs that you'd have to travel for work. So I imagine we will get to a point where business travel picks back up, but I don't know if it'll ever be exactly what it was before, because we had Zoom, we had Google Meeting, we had GoToMeeting, we had all these different platforms. They're used in such a greater fashion now. There were a lot of people who were going into offices that'll never be going back to offices full time. There were a lot of meetings happening face to face that won't happen face to face anymore. A company might figure out they could send 4 people for a 3-day meeting, and it'll cost their time, the flights, the hotels, the meals, everything like that, versus they could put together a 4-hour Zoom call, and that costs the company pennies on the dollar compared to a big trip like that. So I think the realized cost savings will continue, But with conferences and with the way you and I met, I do think that will eventually pick back up, though slowly. And we're seeing the hybrid type events. Before we started recording, I mentioned FinCon. There are going to be live speakers there, and I'll be at that conference. But there are also pre-recorded sessions, so it's friendly to people who are there in person or people who are watching from home or from work. So I think we'll continue to see more hybrid things, just trying to make everybody a little comfortable. We're trying to cater to everybody now across travel and different industries. And and I imagine that'll continue as we keep recovering and hopefully get the worst of this behind us, and we can save a lot of lives and avoid a lot of illnesses and get back to a more normal life. We'll just have to see.
Well, you're a very active writer in national publications, writing about personal finance as well as travel, consumer finance, and also financial literacy. What are some of the keys now you see for people affected by COVID, maybe lost income, lost jobs, to recover and get back as we get hopefully back to a more normal economy going by the end of this year, going into next?
Yeah, that's a great area to talk about, because we've seen so much up and down with the work world since COVID started. Early on, we saw these mass layoffs. I had to do a lot of drives to Denver and back. My dad was sick with cancer, so driving between Southern California and Denver, that meant I was going through Las Vegas. And I drove down the Las Vegas Strip a couple times when it was totally closed. There were police cars blocking the entrances to the hotels. And as I drove down the Strip, I was thinking, geez, there's hundreds of thousands of people that work in these industries, between the hotels, the restaurants, the entertainers, the transportation, the airport, everything that supports that. And that's just Las Vegas tourism that I was thinking of, all those lost jobs. So it's been a huge impact to so many people. We've all seen that. So for people trying to get back on their feet, there's been a lot of great government resources. They're not all going to last forever, but the CARES Act had rent and eviction and mortgage foreclosure protections. So there are great resources to help keep people in their homes, hopefully. That's not being enforced evenly in every state, but there are resources to help. Again, those resources will slowly start to fade away. There's the early child tax credit for parents with young kids. So I'm getting that every month now as a direct deposit from the IRS instead of a lump refund at the end of the year. So there are some things the IRS has done to move money around as well. But I think the biggest opportunity we have going forward is, the last I read, there were 1 million more jobs open than people looking for jobs. So if there's ever been a time in my lifetime that it's a workers' market, you could pretty much have your pick of jobs and pay right now. Even it's harder for the lower educated jobs. The pay rates aren't as great, but we've seen those going up. Companies like Amazon and McDonald's, company-owned stores, have raised their minimum wages to $15 an hour. We're seeing that in other stores, and I'm not saying it's easy to get by on $15 an hour. It's not in a lot of places. However, there are jobs and there are more opportunities, and with employers wanting people more than people want to work, if you do want to get out there and find something, this is a great time. If you want to do a career change, you might find a company that's willing to help support that. And we see certain industries where teachers, nurses, airlines, pharmacies, where there's just a huge lack of trained professionals who know how to do these jobs. So there's good opportunities to move in there. And also, the pandemic's having a lot of people rethink kind of what they want to do, and if they're happy sitting in an office, what kind of career and job they want. So I've actually had some articles come up writing about trade schools and trade programs, because those can offer a really neat and unique opportunity for people to make a pretty good income. If you have a trade certification in like an electrician or a plumber or something like that, kind of contractor, you can often make easily $60,000 to $80,000 a year. It's a pretty darn good income in most of America, and you don't have to go get a 4-year degree to do that. You can often just get a trade certification or maybe a 2-year associate. So there's there's ways that we've had, opportunities for careers that you might not have looked at in the past could be more attractive now for some people.
Yeah.
So it's a good time to decide what you want to do because you have more opportunity than a lot of times before.
Absolutely. And two of the themes that we've heard in multiple banking conferences over the spring and summer is right up your lane in terms of increasing financial literacy across the board, especially to young people, and then increasing services available to the underbanked or the underserved financial community. You've got a book out, The Personal Profitability Complete Beginner's Guide to Personal Finance, which has got to be a great text. Tell us a little bit about your thoughts on improving financial literacy and serving the underbanked.
Yeah, so that's another great topic. So for financial literacy, a lot of it starts at home because we're unfortunately in a situation where most schools don't have any kind of personal finance education at all. Now, I was lucky that I remember in I think sixth grade, my middle school teacher, Mr. R, he went over to a local bank and got them to donate a stack of, I don't know, 100 check registers probably for our classes. And he taught us how to balance a checkbook and do basic things like that. But that wasn't required by the school curriculum. I was just lucky to have a teacher who taught me that. Most kids won't even learn that. Not that you really need to balance a checkbook by paper these days anyway, but just the knowledge of the fundamentals of what you're doing balancing a checkbook is an important kind of a knowledge skill. But beyond that, credit cards, loans, credit scores, bank accounts, you don't learn any of that at school generally. So it has to fall back to parents, and hopefully families teach you well. I was lucky to have a dad who was very open talking about money at home. My grandpa was a college professor at a business school, so he taught me a lot about money too. He gave me a general ledger notebook for my 8th birthday because that's just what every boy wants, to start tracking their income and expenses when they're 8 years old. But most families don't do that, so it's important for families to try to become more open, make money less taboo of a topic, because if you don't teach your kids about money, they're not going to know about it when they have to get out there and make those decisions on their own. But there's also the problem of a lot of parents weren't taught well themselves, so what they're teaching isn't always the best information. There's a lot of families who have a mindset of, oh, I have money, I need to spend it before it's gone, whereas other families have a mindset, oh, I have money, I need to save it for if something happens. So there's cultural things that they're not going to just change overnight. So I'd say it just has to be a big national conversation, and I'm proud to be a part of providing a ton of free resources. If anybody wants to learn about money, you could go spend $10 and buy a book, and it'll teach you most of what you need to know. But if you don't have the $10, you can just go on Google. Everyone has a smartphone. Even homeless people have smartphones. You can get on your phone and go for free on the internet and search for personal finance tips, and you'll find a lot of great content. Whether you want to read it, whether you want to listen to it on podcasts, whether you want to watch it on YouTube or another platform. If you want to go through social media, there's personal finance TikTokers now, Instagram, wherever you want to go. There's free money content. So we just need to have that continued raising awareness that's out there and have people engaging in it so they can learn to make the right money decisions. And hopefully that then permeates to those who are underbanked and unbanked. And by providing both that free education and encouragement and affordable tools and affordable accounts that are geared towards different groups' needs, we'll be able to get more people into the banking system.
Okay. Hey, with retail spend and consumer spend and business expenses changing, credit card companies have been affected, have had to change their offers. Certainly travel, hopefully, is now coming back again on the consumer side. It's a little bit on hold on the business side. Obviously, e-commerce spend is way up. Groceries has been a big category that's supported, but retail stores still are trying to make a comeback. Actually, the hot weather has been helping get people to go in there in the malls again. What are some of the things you see that are good values from credit card companies today that are resonating with consumers?
Yeah, I think the things that have worked best are when the credit card companies have started to think ahead on what the different consumer preferences are. So as you mentioned, grocery stores, for example, are a big place. We've all shifted our spending. We've been going to restaurants less, most of us, and buying more groceries. So the Chase Sapphire cards, I believe, had added options to redeem rewards at the same rate you could book a flight, which was, let's say, a 1.5 cents if you have the Sapphire Reserve card, or 1.25 cents if you have the Sapphire Preferred. So you before would have been able to redeem those for flights, hotels, et cetera, at that rate. And they added the option that you could reimburse yourself for grocery purchases at the same rate. So that was a way to entice people, get people excited, probably prevent attrition. People, I was looking at my $400, $500 annual fee thinking, oh, is this worth it when I'm not going to hop on a plane and I'm probably not going to go to a travel lounge and get my free drinks and all that. And having those extra options for groceries and other types of redemptions, I think was a wise decision. And I think the bank should keep an eye on those types of trends going forward and look at how they can help consumers deal with whatever unique new challenges are coming up. If you look at supply chains, buying anything is really hard right now for a lot of people, for a lot of industries. I just bought a new box spring for my daughter's bed. When I went to the store, he said, I don't even know if we have any twin size box springs to sell yet. He took me back and they had 3. And he pointed me to the other wall and there were no king, no queen, no full. Like, they were almost out. That's just one product in one store. So if banks are able to help consumers find and get a hold of what they want, that might help improve spending too. Help looking for substitute products and things like that. I know Capital One had bought, I think they call it WikiBuy. They own it's a discount shopping plugin that you can add to your internet browser, and that might help you find like a substitute product. So maybe banks can, if you're searching to find a couch, maybe they'll help you find one that's available sooner. I know I'm just making up ideas, but so there are opportunities for banks to get out there and I think be proactive to help their consumers. But as long as they're focusing those rewards and benefits on what people are really needing right now and staying at the front of that curve as things are changing so quickly, that's probably the best that we can do, because no one has that crystal ball to see the future.
Yeah, shifting benefits more towards, as you said, restaurant or grocery right now, and e-commerce, which have been so strong really through
restaurant delivery was another good one.
Restaurant delivery, of course.
Yeah.
It's amazing. I'd like to see the amount of business now restaurants do from pickup and home delivery versus their in restaurant sales. We have to check on that one. Now, one thing you mentioned that you are looking at very closely is cryptocurrencies, Bitcoin, others, and when you go to the international market, we've been on some of the conferences like Money 2020 this year, where they talk about it, and the fintechs that are growing, especially in overseas markets. What do you see? What is happening where's the value that cryptocurrencies are providing to consumers right now?
So right now, at this exact moment that we're talking, and this industry is changing so quickly. So when I say right now, the answer might be different in a month. But right now, the 2 main assets people are looking at are Bitcoin and Ethereum, and they're pretty speculative. They're pretty volatile. Ethereum, it's the second biggest cryptocurrency by market cap. So those two are definitely the biggest cryptocurrencies by far. But then, if you look, there's thousands of them now. I could go create a cryptocurrency. I was looking at how I could make my own. So it's easy to make them. There's a lot of scams. There's a lot of junk out there. But if you're able to weed through that and see what the technology is doing, I think there's a lot of promise and a lot of potential that goes far beyond just buying and selling things like Bitcoin. An example is there's one cryptocurrency I'm kind of a fan of called Stellar Lumens. XLM is the symbol if you're looking it up. And what's different about Stellar than Ethereum or Bitcoin is the transactions process much faster and at a much cheaper cost. So if you're sending an Ethereum transaction, you might have $20 in network fees. With Stellar Lumens, probably 2 cents, 3 cents. You're going to have much, much lower fees. So that's a huge value and a huge benefit. So if I were, let's say, I live in here in California and you live in Germany, and you sold me some product, we made a deal, and I want to pay you with a digital currency like Ethereum, and we're going to have transaction fees that'll be similar to like a Western Union or a MoneyGram or sending an international wire. But if I were to send you Stellar Lumens, the cost it becomes negligible, and that technology could apply to any type of international trade, any type of contract, any type of currency transaction. If I wanted to trade pounds for euros, you could use Stellar Lumens as a middle ground. So there's some really neat things the technology can do with asset tracking. But what people should be careful about is, like there are many competing blockchains, many competing cryptocurrencies, and a handful of them will probably make it and do really well. As I said, it's speculative and risky. Some people are going to make a ton of money, but most of them are probably going to go to nothing. So you have to be really careful on where you put your money if you get involved yourself and know where your money is going. Because if you don't understand it, you probably shouldn't be investing in it. And I'd say that goes for anything, the stock market, cryptocurrencies, derivatives. There were a bunch of guys on Wall Street were investing in things they didn't understand. And 2007 and 2008 happened. So it can happen to the best of investors.
Yeah. Where do you see the application for? Is it in trade finance? Is it in e-commerce? In cross-border transactions? Is that really where the value is for cryptocurrencies?
I think the two biggest value areas, one is payments. So you're saying cross-border. It doesn't just have to be cross-border, but any type of payment. Cryptocurrencies could replace ACHs and bank wires and such. It's again, you're your own bank. Like here I have two. These are both cryptocurrency hardware wallets. This is a little ledger. This is called a Trezor. Actually, I have another one here. I do reviews of these. This is called a Keystone. So each one of these could kind of work as its own bank. It's its own place to keep money. If I lose it, I lose my assets. I lose my bank. But I could use that to send money directly to you or receive directly from you without any other financial institution involved. So that's where the payments opportunities become really interesting. Business to business, person to person, could work for remittances. If you work in the U.S. and have family in South America, if you both have a low-cost cryptocurrency wallet, you can skip the Western Union stop and just send them your cryptocurrency right over the internet, and they'll have it almost instantly. So that's a really neat thing.
Well, I tell you, on September 30th, I've got the pleasure of moderating a panel for the Card Forum, and one of the panelists is from Western Union we're going to talk about payments. So I'm going to ask them about cryptocurrency and what you just described as a big future application that's growing. Hey, quick thought. We've been looking, and I think everyone's been looking very closely at fintechs, certainly in the banking space. Actually, the community bankers have been looking at it as various types of applications that can help them provide a competitive service platform to the larger banks, and a lot of growth there. What do you see happening in the fintech space that's making a difference?
I think the most exciting things in fintech right now are the developments focused on those underbanked and unbanked and new investor populations that we were talking about a little bit earlier. Okay. There's these kind of newer, they're called neobanks. They're like no fee checking and savings account type banks that usually work only online. So you can't go into a branch. So these banks have a much lower cost structure. They're not running networks of hundreds of branches like a Chase or Bank of America, and that allows them to offer very low cost services because their employees and their technology scales so well. And if you can get, thinking about a family who's unbanked today, if they get paid with a paycheck from work and have to take it to a check cashing store, they could spend, $10, $20 on the check cashing, and then they have to send half the money back home to a family overseas. So that's another $20 in fees. And then maybe they use a prepaid card to pay some bills online because they don't have a debit card or a credit card. So then that's another, $7 to buy it and a few dollars every time they reload it. It's all of a sudden they're spending all this time and all this money, and it's very inefficient. If we could get someone like that into a no-cost checking account, they can deposit a check for free. They can use free online bill pay. They're saving all this money and all this time. Their life gets so much better, and then they can fully engage in the U.S. economy and doing things like online shopping. You might be able to save money buying on Amazon on some purchases versus Target or Walmart or the dollar store. So if you're really dollar focused, not having the option to shop online is a huge cost. So just getting people involved in that system, taking away the costs of things like depositing checks, getting access to direct deposit, that's huge. So I give kudos to all the CEOs and all the startups that are trying to get people into the system, because they're doing, it's a win-win. They're helping their customers. Hopefully, most of these companies aren't charging $30 overdraft fees. They're not charging any. So they're really trying to help people, I think, and hopefully they make a little money in the process. That's a win-win.
Hey, absolutely great perspective and insight there. Now, this fall, I know you're going to a few conferences. You'll be speaking, and also you're going to be writing on these topics. Tell us a little bit about where you're going to be and some of the topics that you're going to be developing this fall.
Sure, yeah. So my next conference, I'm headed in a few weeks to FinCon. That's the big financial and media conference. It's going to be in Austin. I've actually been to every single FinCon. I've not missed one yet. So I'm excited to be back and see some friends in person. They're doing this one as a hybrid conference. So we're going to be having a good chunk of people there in Austin. I'm planning to go myself. And anyone else, I have many friends who've already signed up to stream and watch everything online. So you have either option. That's really that's my biggest conference of the year personally. That's where I meet most of my clients and see colleagues and friends in this space. So I always have a great time at FinCon, and I'm looking forward to seeing, they've sent out some safety information. So it's going to be a little different conference experience than I'm used to, but I think that will be a good thing, and it's good to see that they're taking steps to keep us all safe with the virus. So that's my big upcoming travel. The topics that I'm writing about most, we mentioned cryptocurrency. That's been probably my biggest writing topic for the last couple months. It's been big all year, really, since that huge run up in prices at the end of last year. So cryptocurrencies have been big. Rewards credit cards are always a big topic for me. Travel a little less because people are traveling less, but the rewards are still lucrative. And I'm always still writing about how to save up and build up your travel rewards balances, so when you can get back out there, you can do free and discounted trips. So travel rewards, that's a big one, and banking, general banking is always a topic. Investing, it's a busy money time out there.
and tell us, please, Eric, where are the best places for people, readers, to find your articles?
Sure. You can find me at Investopedia, at The Balance, at Investor Junkie. My own site is Personal Profitability. If you want to connect with me, the easiest way to do that, just type eric.money into your browser, and that'll take you to links to my Twitter, my podcast, my blog. I have a free week-long course called Personal Profitability Bootcamp. It's all there, eric.money.
Eric, you got a lot of things. Eric Rosenberg, ericrosenberg.com, personalprofitability.com, eric.money. You are a very strong presence and an informative presence on the internet and in publications on personal finance, and really a pleasure to have a chance to talk with you. I hope we'll get together this fall at one of the events. I know we're looking at our friend Jason Steele's event, the CardCon conference,
Yes.
a gathering of travel and credit card media that he's going to be hosting in November in Colorado. And I
Yes,
don't know.
I already have my flight and hotel and ticket to CardCon. So assuming the Delta variant doesn't prevent it, I will be there.
It should be a great event. And Eric Rosenberg, thank you for joining us today. And this is Ken Kraetzer for CBSI Services Talking Business. And all to highlight our work at CBSI, we provide insurance-based benefits to the credit card and payments industry. I'm in my home office today in White Plains, New York. Have a great day.